Hello everyone, this is Dan Hussey from ElliotWaveForecast.com, bringing you a video blog, technical blog post on the Euro US dollar. You wanted to cover this kind of publicly before the ECB tomorrow to give everybody a good idea of the technicals and some of the generalization of what we're looking for the Euro. We have a really big day. Fundamentally, there's some smoke in the room, and where there's smoke, there's often fire. We also had the Swiss National Bank last week pull their 120 bid out from the Euro franc, which sent both the Euro lower and the Swiss higher. That type of move was really interesting to see. The SNB is a fraction of the size and a fraction of the institution that the ECB is, and they knew that if the ECB came out and lowers rates, right, or announces a new QE effort, their QE effort, I guess you could call it, or really what is just a price fix in the Euro franc at $1.20, or a peg at the 120 level, I shouldn't say a peg, it's actually a floor that they put in at the 120. They know that their floor may not be able to withstand that type of weight. And I think that's why, personally, I see that as the reason why the SNB chose last week's decision to step out of the way for the Euro, to step out of the way of the ECB, and I believe the ECB is about to announce tomorrow. Not that this affects where we think the Euro is going at all, I'm just saying this is where I see kind of logically things going, so that we can then, okay, if that's the market sentiment, everyone's short the Euro, everyone wants to see the Euro go down, that means that we could have one of those capitulating lows for the Euro tomorrow. It's in the realm of reality. We could have a spike low that reverses, and that is the low for the Euro for a long time. We could see the Euro rally up a little bit and then sell off down to new lows and get crushed down to parity. I don't know how fundamentals are going to play out, but what I do know is where the technicals are, and those are what matter. So let's begin. For starters, Euro has been chopping around in a very corrective structure off the lows. I would be lying to you if I didn't say, though, that Euro isn't holding a 50% long off its low. The problem is this 50% long is only after a three-wave move up. So there's a very good chance that, as we've shown here, that this is actually some kind of WX. And I'm not sure if the W is here and then or here. Either way, it's, at this point it's kind of inconsequential. It doesn't change the idea of where we want to be sellers. And there's a couple of places. The first place is, of course, an extension short from the 122.45 anchor to low. This is where a 50% short will come into play. It's an extension short at the 1850 area. That's our first inflection zone, our first major inflection zone that we can get to if we do get some kind of pop from the news. That's where you're going to want, one area you're going to want to look to be a seller tomorrow. We also have a little bit more aggressive of a level, and you can't see it too well on this chart, but it's actually where the gap was at right around the $1.20 right here, and the gap low to lows have been holding what looked like a series of extension shorts, once, twice, 3 times. So we kind of have 2 setups here, and unfortunately, it's not, the Euro, we have some setups and they all kind of overlap, so it's not we don't have the most exact, but going into a news event tomorrow, I wasn't expecting to have the most exact level to take, but, we kind of have a landing zone, I'd call it right now for the Euro. And of course, I'm not looking to maybe step in front of that spike on the news itself. I'm a little bit of a coward when it comes to that, although I'm not afraid of the news, I'm just afraid of the extreme volatility that can come with it, right? But the idea here is that if you see that move up and you can see that quick correction or that quick reversal setup occur, which, in the micros, if you're very inept in what we do, it's a good way to catch a turn in a big news event. Anyway, so into this, what is really an 118 to 118.50 area for the Euro. Well, actually, no, it starts at really 117.29, but I don't find much faith in that level, because at this point, equal legs up would actually take us up toward, closer towards the 178 area, or the 117.80 area. Okay, but there is something I did want to notice, something interesting, and I'm actually going to bring up Thinkorswim just to show this, because it shows the gap. The other price data we had there, it doesn't show a trading hours gap, but there was a trading hours gap. It didn't look like a gap in the overnight, from the overnight trading, because the first chart we looked at, anyway, the first chart has ECN brokerage and has off-the-market trades that occur before they open. Okay, so it obviously was probably there, but we opened lower, and we do actually have a gap right around 120 on the euro, which is still open. You can make an argument that maybe there isn't a gap here and it's just whatever, but it is interesting, and I wanted to point this out just in case, you know, it's a long ways off, but it is a 50% decline from the prior high to lows. So it is 50% of our recent decline, and it is aligns with the gap. So I just wanted to point it out because obviously I would not want to be a seller there if it goes straight up from here to that area. That's way too strong. But if it rallied up, then pulled back, and then rallied up again and gave me a bigger three-leg structure, I'd be a seller up at the 120s, but not now. Right now, I'm concentrating on the more aggressive levels. First off, the extension short drawn from a 1973 anchor to lows here. Technically, it's a 50% short. It's basically 50% from the gap fill to the downside. This is also the lows that we've been holding 50% in all of our major pullbacks so far. So there's a 50% here, traded to target. Then it traded in the full 50 again to target, and then it's, you know, maybe it'll trade the full 50 again until target. And right now, this is kind of looking like an A and maybe a B wave triangle, and then it'll get a little C pop, and then maybe downside. You know, we don't know. Maybe ECB is going to be a non-event tomorrow. We have no idea. But whatever does happen, we know that technicals are here giving us the levels that the market is going to inflect and react off of. So with that being said, as of right now, this is probably not going to stand, closer to the London session. But unfortunately, I'm heading off to get some shut-eye for the evening to be able to wake up really early. But, you know, equal legs here. Let's see if there's reaction from the 117.20s. That's the most aggressive inflection zone. That's more than likely just going to be the peak for like an A and then the B wave and then C up, and the C up can take us again, you know, into that 118.50 to 118 area, which is really tomorrow, where we could look for a more substantial high for the euro. And this is a major extension short. This is a huge level. It's coming off of a prior lows to lows extension, so it's a 118.50. I honestly, while we're below a 119.40 tomorrow, we are going to be looking for the euro to head down towards a 112.68 target, so long as we trade up into highs here. In the near term, if we do head down into the lows, look for like a lows to form around a 113.75. Again, we're not buyers of the euro. We want to be sellers here, but we're not entirely, we can't just step in front of the ECB. But tomorrow's live trading room will be covering all this in detail, so just join us there, and you guys will have we'll have a great trend and trade recap for that live trading room, the post ECB here. So with that being said, hope to see you all tomorrow. Good luck trading. Have a good day, everybody. Stay frosty, and we'll be back with you as price action develops. Take care, guys.